Apple just reported their Q4 numbers, and I'm going to walk you through every piece of their financial information from the profit and the loss, the balance sheet, the cash flows, and we're going to look at this stock from a technical perspective today on this show. What is going on, investors? Get excited because this moment only happens 4 times a year. We're going to go through Apple's quarterly earnings, and these happen to be the Q4 earnings. Now, what's also happening in the after-hour trade, the stock's selling off a little bit, about 3.5%, down to about $147 per share. Talk about this from a technical perspective. The stock has been in a tight range really since about July and a summertime. So we'll talk about that as well. Can you use this as a buying opportunity? Can you accumulate shares of Apple? Does it make sense from a fundamental perspective to accumulate these shares? We'll talk about all that on today's show. Now, the top of the press release is going to say the EPS is $1.24 per share. It's essentially in line. Revenue came in at $83 billion. We'll show you that here in a second as well. And step by step, I'll walk you through these. That was a miss of $1.6 billion from what the street was expecting, but we're up 28%. I tell you what, when you're talking about a company where $2.47 trillion to grow that top line by 28%, I mean, that's absolutely fantastic. Shares, like we mentioned, are selling off a little bit in the after hours, and I think that could create a buying opportunity. So we've got our product revenue coming in at $65 billion. The street was expecting 68. Some of this probably can be explained by supply chain issues. Look, I just ordered a brand new Macintosh computer, and I was hoping to get it by this week. It doesn't look like I'm getting it until next month. So we'll talk about that more in a second. iPhone revenues came in at $38 billion. The street was expecting $41 billion. Apple released a press release a while back that they were going to cut their expectation on iPhone by about 10 million units, simply because they didn't have the supplies and the chips to make those phones. The other thing to remember is that the iPhone 13 only landed the last few weeks of this quarter, so it could be that consumers that had iPhone 13s or older were simply just waiting for the new iPhone to come out. Mac revenues came in at $9.18 billion versus a $9.3 billion consensus. iPad revenues came in really strong. Wow, iPad really blew up to 8.25. Consensus was for only 7.1. iPad is absolutely humming. We've got wearables coming in at 879. Again, they released a new wearable more recently. It could be the consumers were waiting for that. Consensus was 9.28 billion. And that service revenue, which we talked a lot about on our Fang Stock Recap show, where every Friday we recap Apple among the other Fang stocks, and we've been going over the news with their service business. This is primarily one of the bulk of this service revenue is the money that they charge on the App Store. That fee revenue has been coming under fire, not only through litigation, but through Congress and potentially regulation from Washington. That revenue is still untouched. That came in at 18.27 billion. The street was expecting 17.6. Let's jump into these revenues, because I tell you what, guys, you're not going to see anything much more impressive than this. This is just absolutely phenomenal, considering the backdrop we're up against, right? Okay, we've got a lot of supply chain chip shortages, trouble getting shipments over here to the United States, since Apple makes the vast majority of probably all their products overseas. Just getting them over here into the United States is difficult, let alone all the individual components into that product and then ship it over here to the United States. Total net sales, like we talked about, came in at this $83.36 billion. Last year we were sitting, thought it was great. We were sitting at $64.7 billion, up just huge, this $83 billion mark. Again, here's that service revenue from 14.5 up to this 18.3. So obviously, if that takes a hit, you get some regulation that's passed, Apple loses some key court battles, which it doesn't look like they have recently. Well, that service revenue could take a hit, and that certainly would affect the bottom line, which we'll talk about here in a second. But the product revenue went from this 50 up to this 65. For the full year, just everything flowing like water over at Apple, just looking beautiful. Now, here's what we look from a margin perspective. So our products, we spent $42.8 billion to make this $65 billion. The reason why investors are really focused on the lawsuits and the litigation around App Store is because look at these margins. You spent just $5.4 billion to make this 18. I mean, that's basically $13 billion of gross margin coming off of $18 billion worth of revenue. I tell you what, every business would absolutely love that. And obviously that really helps Apple out. That gives us total cost of our sales down here at $48 billion. So you take this $83 billion worth of net sales, you minus off 48, and you get your gross margin of $35 billion. I want to compare that before we run through the other cost here, that last year we're sitting at $24.7 billion. So you've basically bolted on $11 billion to your gross margin side over the last year at Apple. Now, we've got other expenses over at Apple as well. We've got R&D, but look, those barely budged. You went from $5 billion up to $577. That's nothing. Selling, general, administrative, you went from about 5 up to 5.6. Look at this. Total operating expenses from, we'll call that 10 billion, okay, rounded up to 10, to 11.4. So you only added about 1.4 billion dollars to your operating side. I just told you they bolted on virtually $11 billion to their gross margin side. So you betcha, when your gross margins increase by 11 billion and your operating expenses go up by like $1.5 billion, yeah, your net income, or your operating income in this case, just absolutely explodes by over $9 billion. You went from 14.7 up to $23.7 billion of operating income. We're not talking about revenue. And again, we go over these numbers and I try to emphasize this so you understand this as investors. $23 billion worth of operating income. There's companies that have been around for 10 years with massive valuations that don't have this on the top line revenue. Top line revenue isn't $23 billion. Our operating income in 3 months at Apple is $23 billion. You want to annualize that out, which we'll do here on the 12 months ended. Take a look at this. 108 billion. This is not 108 million. $108 billion worth of operating income off of $365 billion of net sales. So you had $365 billion worth of net sales, and nearly a third of it flows down to operating income. People wonder why these companies are worth so much. And when you stretch it out to like a 10-year chart, the stocks are up darn near 1,000%. This is why. There's no other reason why. Does Apple make the best phones? I don't know. You could argue maybe not. Do they make the best computers? I don't know. Maybe not. Do they make the best anything? Probably not, honestly. Okay, I use a lot of Apple products and I want to throw them out of my window every once in a while because I get a little frustrated with it. But there is absolutely nothing better than this in the entire stock market, where you do $365 billion worth of revenue in 12 months, and nearly a third of it flows down to the operating income. Just absolutely fantastic. And then we pay some income taxes, and nearly a third of it flows down to our net income. It's just absolutely amazing. On a diluted share basis, you got $5.61 per share on earnings. They're only paying us 88 cents. Hello, Apple, can you pay us a little bit more? I mean, they could quadruple the dividend and quite frankly, still have some money left over. Now, what they are doing over at Apple, take a look at this. Here's over the last year. They had about 17.5 million shares diluted. Now that's down to 16.8. We'll see evidence of this when we get down to cash flows. They are just buying back stock over at Apple. It's just unbelievable what they're doing. Now here's our net sales reported by segment. You see North America up, or most of North America up about $6 billion on the sales side. Europe doing quite well. Look at China, $7.9 billion up to $14.5. This is why you'll never see one of these CEOs of these companies say anything negative about China, because look at this growth. Okay, you went from 7.9 up to 14.5. Tell you what, you have that kind of growth next year, all of a sudden China will overtake Europe in terms of gross sales. And I think a lot of these CEOs are looking 5, 6, 7, 10 years down the line. It could be that China's even bigger than an American business over at Apple. And certainly if you're a shareholder of Apple, you're crossing your fingers, because this stock would be wildly undervalued. I mean, we're probably talking 50% undervalued if Greater China can eventually overtake America in terms of sales. Whether or not that happens, whether or not the Chinese government will allow that to happen, I don't know. We'll see what happens there. Now, Japan went from about $5 billion up to $6 billion, and rest of APAC up about $1 billion. Here's your $83 billion worth of gross sales. Here's the segments by category. So you got the iPhone ticking from 26 up to 38. Remember again that the iPhone 13 was released just towards the tail end of this quarter, so you don't get the full effect. We'll see that in Q4. In fact, I looked at Tim Cook's comments. He's very confident about next quarter, okay? He's very confident about the Mac. He's very confident about the iPhone. If you look at the new iMac Pros or the MacBook Pros that were just released by Apple, those are $4,000 laptops. If you just surf on email and you just do basic stuff on your MacBook, you probably don't care, and you sure as heck wouldn't want to spend $4,000 on that. But someone like me, a MacBook that is that capable will literally save me hours out of my day recording videos, rendering them into the appropriate format for YouTube. I absolutely need one of those MacBooks, and I'll be honest with you, expect much more creative and much more fun videos on this channel in the future, primarily because of the MacBook. It's going to make it easier for me to make videos for this channel. I look forward to working with that computer, and I think a lot of professional users are going to be using that, and I expect a big, gigantic number in the fourth quarter for Mac because there's a lot of people wanting to upgrade to that. iPad, absolutely sensational, 6.8 up to this 8.3. Wearables, we talked about. Services went from 14.5 up to this 18. Again, here's that $83 billion worth of revenue in the quarter. Now we come down to the balance sheet. If you thought the operating income was good, take a look at this balance sheet, guys. Here's our cash and cash equivalents and marketable securities. Our left-hand column is our most recent quarter. We're sitting about 35 on cash and another 28, so that's $62 billion. So you might say, well, Apple's got $62 billion worth of cash, right? Well, no, hold on. Down here at non-current assets, wouldn't you love this? In your bank account, you got $62 billion worth of cash. And then in a bank account on the side, I'm sure maybe the lenders that they have, we'll talk about the debt that Apple has here in a minute, and it's a substantial amount of debt. My guess is those lenders require them to put this money in a different account. Here's our marketable securities down here. Oh, yeah, we have another $127 billion. No, that's not $127 million. Another $127 billion sitting on the side. So we got nearly $200 billion. Yeah, $200 billion worth of cash sitting over at this company. We've got $100 billion worth of operating income for the last year. And we've got another, we'll call it $200 billion just sitting in cash. Hello, this company is probably undervalued at $2.4 trillion. So if this stock is going to start pulling back, I think you know what you need to do when it comes to Apple shares. Now, in terms of the liability side, we do have this $109 billion worth of debt. But again, they have more than that in cash. And if you look at the interest rates that Apple is able to borrow at, it would just make you want to cry. Because if anybody wants to lend me money at the rates that Apple borrows at, I'll take any amount of money you possibly want to throw at me. Now, what's even more impressive than this, come here, take a look at the cash flows. So we're on the cash flow statement over at Apple. We've got our 12 months ended. Our left-hand column is our most recent year, and we've got our net income coming in at, I mean, it's hard to say this with just being serious, $95 billion worth of net income. We get to add back in things like depreciation, stock-based compensation. We get cash generated by our operating activities coming in at just $104 billion. That's over $24 billion higher than we were last year. We've bolted on over $20 billion worth of free cash in the last year over at Apple. And I don't think there's any reason to think that is going to slow down anytime soon. They're not doing a lot of investments into the company. I tell you what, only about $11 billion over the last year. And I say only $11 billion like it's nothing, okay? Yeah, $11 billion is nothing when your business spit out $104 billion worth of free cash flow over the last year. $11 billion is like if you had $100 in your pocket and $10 dropped out, probably wouldn't be that big of a deal. That's basically what Apple just did. Now, in terms of their financing activities, take a look at this. Repurchase of common stock over the last year, $84 $85 billion, nearly $86 billion worth of buybacks over at Apple. So you better believe, man, I'm surprised the stock's not up even more. They bought $86 billion worth of stock. Look what they did last year. $72 billion. No wonder over in Washington, they're trying to tax stock buybacks, because look at what Apple does. They come here and they borrow money. They literally this is what Apple does, okay? I'm not telling you any secrets here. Apple borrows this money not because they need it, okay? Look, they have they have like $200 billion running on their balance sheet. This is a company that just prints money like the Federal Reserve. They printed $100 billion worth of operating income, $104 billion worth of free cash flow. They don't need to borrow money. What do? They borrow money at 2% and they buy back the stock. That's what they do with the money that they borrow. They're not borrowing money to run the business, because I just showed you how well this business is run and how much free cash it builds. They borrow money for like 2 or 3% from a bank, and you wonder why they do that. Why does Apple do that? Well, look, you borrowed money for 2% and you bought back stock that over the last year is up 27%. On top of that, now you don't have to pay a dividend on that share, which is sitting right now at about 0.59%. So you get to subtract that off. They are literally getting this money for free. This is why Apple borrows so much money. They're literally getting it for free. It's just unbelievable what they're doing from a financial perspective. That's the end of the financial statements. It literally does not get any better than this. Now, what would absolutely be even better is if this stock continues to pull back. Now, the stock earlier in the day was up over the range that we have here at about $150 per share. We talked about if Apple prints a green candle up above 150, and it sure as heck did it today, but it did it on earnings day. Okay, that's what you got to always factor in. When a company prints a big green candle the day before earnings, it doesn't mean all clear. Okay, you got to wait till earnings report happens. If the stock reacted nicely, I think we could have had a run up here up to all-time highs, up over $158 per share. Now, fortunately, I think the stock is actually pulling back, and it's pulling back into a box between $143 and $150 per share. And I think absolutely you can accumulate Apple shares in this box. Understanding that these financials are, first of all, absolutely fantastic in a difficult environment, difficult supply chain environment. Apple CEO says the supply constraints are getting worse, but demand remains strong. But Tim Cook did seem overly bullish about the upcoming fourth quarter, which they have some visibility in already with sales of MacBook Pros and their flagship iPhone product as well. So I actually think this is an area where you can accumulate Apple betting. You're basically betting that the supply chain starts to clear up sometime in the second half of next year. Because I'm going to be honest with you, the minute it looks like supply chain is starting to clear up over at Apple, well, this stock will run before that, okay? This is such a well-covered stock. Their own supply chain is so well documented and so well researched that investors are going to figure out that the supply chain is already loosened. Apple's going to get all their components. They're going to be able to sell all the computers and phones that they possibly want. This stock is going to run before that. That is why I would accumulate this stock now. We're also in an uptrend, okay? Low, higher low, higher low. As we start to pull back, I've got this red line in here. I don't typically like these vertical red lines because, to be honest with you, you can draw these any way you want, and you can you can show that the trend's broken. You can move this around anywhere you want, but I want to show you we are in an uptrend. More importantly, we are sideways consolidating on the bottom end down to 138, but I think comfortably between 143 and 150 on this one. Very, very tight range. I think you accumulate shares. Unless you're already overweight Apple, maybe you want to wait for a deeper pullback. Maybe we get a pullback in the overall market. Maybe there's some outside events that just cause the stock market to pull back. Well, you can wait on this one. You get a break below 143. Well, the odds are you're probably coming down here and retesting 138. I'd be very aggressive buying Apple down in these parts, but I'm certainly likely to step in, add to a couple shares of my Apple investment, even though I've already got a lot of them. I think this company is worth it from a balance sheet perspective, a cash flow perspective, a revenue perspective, a revenue growth perspective. This company checks every single box. It literally checks every single box. And right now, the only thing that's holding it up is the supply chain. And I think I'm willing to bet that that will clear up in the next 6 to 12 months, and I can accumulate Apple shares. And the minute you see a sign of that clearing up, this stock will break to all-time highs up over $150, $157 per share, and it'll be off to the races. Quite frankly, I think this stock could easily go much, much higher when you factor in a $2.47 trillion valuation, but you got $200 billion worth of cash. You'll likely sometime next year print a full year where you have well over 110, maybe even $120 billion worth of free cash flow. I think this stock is undervalued, quite frankly. Hopefully you guys enjoyed this video. We'll be back again soon with more. Good luck with your investments.